Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the phenomenal success of this couple right here who have literally hit a net worth of over $1 million in a very short amount of time. So I'm going to tell you exactly how they achieved this wealth, what they can be doing to even increase their wealth more, what their future projections for their finances look like, and how you can literally copy this exact strategy to build wealth yourself. So if you want some good news and some motivation, then this is the video for you. So without further ado, don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with all of that being said, I say let's jump right into today's article. The article is titled, "A couple in their 30s who hit a net worth of $1 million have more than 95% of their stock portfolio invested in 3 index funds and the rest in 1 individual stock." Take a look at their portfolio. So clearly, we're going to be going over their 3 index funds and their 1 individual stock, and I'm going to tell you why this strategy works so well. The guy in the picture is named Brennan, and I've been following him for quite a while now to see him through his ups and downs in his financial journey. And what I like about Brennan is that he likes to keep things simple when it comes to the stock market and investing. He advocates, as do I, to have a simple approach to buy good investments, hold it for the long term, have it accumulate value, and not to sell. And let that investment keep making you money over the long term. Brennan has spent the last 5 years paying off more than $300,000 worth of debt, including $234,000 worth of his mortgage. So once they became debt-free, they started to invest, and Dave Ramsey actually advocates for a similar approach, to first become debt-free and then focus on investing. However, I would say that you can clearly do both. If you are going to gain more from your investments than the interest rate on your debt, then paying off debt while simultaneously building wealth is the smarter option, but more on that later. In October of last year, the couple posted a net worth of $1 million, to where right now they're sitting at over $2 million in their net worth, with just their investments being over $1 million. And a good chunk of their wealth is tied up in their Arlington, Texas home, which they bought for $495,000, and they bought it completely in cash this year. And if you didn't know, you can buy a mansion over in Texas for $495,000, so they are clearly living really well, and I am very excited for Brennan and his family, especially considering that his wife is pregnant with another child, and I just think that he has set up his family for future success, which is phenomenal, and you can do the same thing. You should also notice that 50% of their net worth is invested into the stock market. Brennan is already a smart guy. He is a CPA, and he runs his own financial literacy company named Budgetdog, but let's dive into their portfolio to see exactly what they are holding in it. Well, Brennan uses a variety of investment vehicles, which would include 4 retirement-specific accounts, a health savings account, as well as a brokerage account. But according to Brennan, in every single one of these investment vehicles, meaning that these are not investments in and of themselves, but rather a place where you store investments and assets to where they can give you various tax write-offs or tax benefits. Some are tax-deferred, some are pre-tax, some are post-tax, and they all have their own individual advantages. However, regardless, with every one of these accounts, Brennan has pretty much the same investments in all of them. And that's when we're going to talk about what he is exactly invested into. Because by investing into only 3 index funds in 1 individual stock, he has a net worth of well over $2 million. And this is a very easy strategy to copy, and I would suggest you look into the strategy so you can do the same. Once you open up an investment account, either through a brokerage or a retirement account, you can invest into a plethora of various different assets, including stocks, bonds, mutual funds, ETFs, and many other things. But Brennan said that he likes index funds. Very smart man. Index funds are extremely diversified, and they are a type of mutual fund which track a diversified range of stocks, which often revolve around a specific theme. So mutual funds and index funds, in my opinion, are literally one of the best investments you could possibly make for your financial future. And the index funds in which he is invested into are Vanguard's Total Stock Market Index Fund, the Vanguard Total International Stock Index Fund, and and Vanguard's Emerging Market Stock Index Fund. So clearly he loves index funds and he loves Vanguard. He probably loves Vanguard for two reasons. Reason number one, Vanguard has very low expense ratios for their various ETFs and index funds, meaning that your money is going to work better for itself instead of you being charged and losing a lot of money due to fees. On top of that, he probably has his brokerage account and these various investment vehicle accounts with Vanguard, which is why he's not invested into other assets which are owned by, say, Charles Schwab, Fidelity, or JP Morgan, because he gets the best and lowest amount of fees by holding Vanguard investments in his Vanguard account. But let's actually talk about these index funds, which in my opinion are absolutely phenomenal. However, the funds that I use have outperformed these index funds for decades. The first one we're going to talk about that Brennan uses is ticker symbol VTSAX or ticker name VTSAX, and this is the Vanguard Total Stock Market Index Fund, which is very impressive. I absolutely love this fund. Clearly you can see that the asset allocation for top sectors are very diversified and it has a very strong performance. We can look at this performance over the last month. It's already up 11%, which is very good for an index fund. Normally an index fund is going to give you around 8 to 12% over the course of a year. But as we see, this has been a phenomenal investment over the past month, past year, past 5 years, and even for the entirety of this fund's lifespan, with a very low expense ratio of just 0.04%, which is one of the best. Now, I don't know his exact allocation, but I personally would have this index fund make up 70% of a portfolio. The next index fund he has is ticker symbol VTIAX, and this is the Vanguard Total International Stock Index Fund. You can see again, it's extremely diversified, which is phenomenal news, meaning that it's going to give you safety even while the stock market is being very volatile. We also see that this fund has had pretty good performance overall, to where it's already up at 9.37%. Over the last 6 months, it's up around 2%. Over the last 5 years, it's up around 11%. And over the max, it's up around 14%. However, I'm not a huge fan of this because the United States literally has one of the best stock markets ever. So why would I invest overseas or internationally? But Brennan is very risk averse, even more risk averse than I am. And that's why he wants this international exposure and diversification, which is going to give him a safety net. For me, I would invest a 20% portfolio allocation to this particular index fund, and I don't know exactly the portfolio allocation that Brennan has. Maybe he splits all of these index funds around 30% each to get him to 90%, and the last 10% of his portfolio is invested into an individual stock. Moving right along here, lastly, he's also invested into VEMAX, which is Vanguard's Emerging Markets Stock Index Fund. Again, very diversified, giving him a lot of safety, and the performance of this is not too shabby either, being already up around 6% in the last month, and it has a pretty decent historical record of either maintaining or increasing someone's wealth. And again, I would allocate probably 10% to this overall index fund. This also has a very high rating according to Morningstar, 4 out of 5 stars, and its expense ratio is just 0.14%. Ideally, you would want expense ratios to be less than 1%, which this clearly is. However, like I mentioned, I personally am not invested into some of these index funds because I've had much more success investing into other assets. But before I get into what I'm invested in, let's talk about his only individual stock, to where he has around a 5% portfolio allocation to an individual stock named Meta Platforms, which we have covered multiple times on this channel. Brennan says that he doesn't typically buy individual stocks. However, he bought Meta Platforms, ticker symbol META, ticker name Meta, at $97. And he said that he is very bullish on the long-term trajectory of this stock, and as soon as he saw them dip to $97, he thought it was a no-brainer to buy. He said he did a lot of deep research, he reads their 10-K inside and out, and he figured that it was a great time to buy this company based on technical analysis. But since he is so risk averse, he only invested 2.5% of his portfolio worth into this company, to where this grew substantially, to where now Meta is almost $300 per share. So this was a huge payday for Brennan. Well done, Brennan. You are showing all of us to be not only risk averse and be smart with our investments, but I love to see your success. More power to you. I love it. Brennan is also not planning to sell his investments anytime soon. He's only 31 and he's thinking of the long long term, and that's exactly what young individual investors need to think. You need to be holding these companies for decades, not just get in and out of them. But now let's talk about some of my investments which have outperformed Brennan's index funds very aggressively. First, let's start off with VTI, which is literally very similar to Brennan's investment into VT-SAX. However, mine is an ETF instead of a mutual fund which tracks an index, so they're very similar and they would perform relatively the same. However, for the other two investments, I would go with Charles Schwab's SCHD so I can get that passive dividend income of very valuable companies, and for growth, I would do QQQM, which tracks the NASDAQ 100 with a very low expense ratio. And this is going to be a lot of technology and information technology focused companies, which are phenomenal growth companies. So I have a stability with VTI, I have passive dividend income with SCHD, and I have amazing growth with QQQM. However, in general, I do agree with Brennan's overall strategy. He says if you're an investor and you are just starting, then individual stocks should not be on your radar. And I literally could not agree with him more right there. He is exactly right. If you are a new investor or have not invested for 5 years or more, then you need to build a foundation or a core investment for your portfolio by investing into strong returning mutual funds, index funds, or ETFs. Brennan goes on to say that the best investors have the bulk of their portfolios in ETFs and index funds, or they hold so many individual stocks that they act as an ETF or index fund. And I completely agree with him here. Yes, index funds, mutual funds, and ETFs are the best way, in my opinion, to safely build wealth over the long term. It goes on to say that the bulk of his portfolio is in those three index funds, which we talked about earlier, but now, since he's already reached that $2 million mark, he can now take on a little bit of extra risk, and I completely agree with him. Of course you can. This has led Brennan to diversify into cryptocurrency, which represents a small portion of his overall portfolio, to where even if he lost everything that he has invested into crypto, that it's not going to hurt him. And I would guess that he is invested into things like Bitcoin, Ethereum, and very strong blue chip type of cryptocurrencies. Again, that is just my guess. I'm not sure what cryptocurrencies he's invested into, but knowing Brennan, I think he's going to invest into cryptocurrencies that would be relatively low risk in comparison to other types of cryptocurrencies. Brennan also said that after researching the wealthiest people and where they invest their money, he said that they invest into the stock market, various businesses, and real estate. Brennan already owns his own business, and he's already very invested into the stock market, and he owns his own house that he bought in cash. So he's already very diversified in these three segments, which is why Brennan is very wealthy, and I anticipate he will scale his wealth even more aggressively as the future goes on. However, if he were to invest into my ETFs instead of his index funds, he would be substantially more wealthy right now, but everyone should do what makes sense to them according to their own research. However, I would love to hear your thoughts about this success story. This is to show you that this is very possible and that investing can be simple and automatic. With only 3 index funds, or 3 ETFs in my case, you can build wealth. Also, in the new year, I will show you these 3 ETFs do work in my portfolio, and I will be releasing portfolio updates bi-weekly so you can see the aggressive growth of my portfolio over the long term, which hopefully will encourage you. It will show you that this is very simple and that you can do this too, and I can't wait to see your future success. So with all of that being said, don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to go and comment some investments that you are into down below. And with all of that being said, I wish you the best of luck and happy investing.